You've heard of the State of the Union. Well, in insurance, we have something called the State of the Market. And according to Insurance Mag, I think it's Insurance Business Mag, they are actually reporting on a J.D. Power production that is being done. When I say production, it's an article or a statistic. So essentially what happens is J.D. Power is one of the more known sources that, yes, you can pay to be part of their program and there's a lot of finances built into it, but they also give really good statistical data. One of the downfalls for insurance agents is that the statistical data is showing that less people are shopping for insurance today than they were in the years past. So according to that, in December or the last quarter of 2021, so that's going into this year, 2022, that most people have not shopped for insurance. Actually, the younger generation is starting to shop more than the older generation. We partially contribute that to the cost of vehicles because the production has gone down essentially since some of the precious metals aren't available. A lot of vehicles have slowed the production. We've seen the prices rise on cars for new vehicles. We've seen the prices for used vehicles go up 30+%. So what that's creating is a whole group of people that are deciding to stay where they're at with their current agent and their current insurance. So the larger generation right now for insurance is the millennial generation. It was baby boomers, but they're getting into their 60s on up, and most companies have already got them. They've already established that, and their kids who are living at home may be affecting the rate, but not as much anymore. Millennials are now the parents. So the shift has come to the millennials. And the millennials, yes, they are savvy shoppers, but 10% of their kids are starting to drive. So we're getting the 15 and the 16-year-olds. Those are the Generation Zs and the X and whatever after that you want to call it. But that's affecting the buying power of the millennials. When you add a new driver, usually you see a very large increase in your premium. And so what's causing is that generations now are starting to look for different insurance. So what are we all doing? Essentially what's happening is the millennials are leaning towards telematics. Telematics has been the largest impact that the insurance industry has seen, to where watching somebody's driving habits have become a thing. If you're on this channel, you've seen me talk about telematics. I've got like 5 or 6, 7, 8, 9, 10, I don't know how many reviews on different telematic systems. We've done State Farm, we've done Safeco, we've done Progressive, we've test drived them, we've done a handful of them, we've done USAA's telematics. A lot of them have some glitchy pieces. I'm actually going to be working on the video that's going to compare the telematics across the board because it's become such a large impact on the insurance. It's a way for you to get those insurance premiums back down. The other problem that we're seeing is not just the cost of cars or the cost of repairs that's causing an inflation in insurance. The whole world is in an inflation, but what's happening right now is insurance is following suit. Because of the cost of repairs and the time and the labor and the lack of having the labor, now the cost to repair a car is taking longer. Actually, I just did a research piece where I read a few articles that talks about the number one complaint for car insurance. I don't need to make a video on it because it's pretty simple. The length of repair time is the number one complaint for insurance companies. I see it every day on this channel. I've got a video that talks and teaches you how to handle claims adjusters. I'll link it right here if you want to watch it. But I'm seeing more and more people asking about, I haven't heard back from my claims adjuster. I haven't heard this from that adjustment. This is happening, it's taking forever. And that's becoming a very common thing. Not that insurance companies aren't doing it correctly, it's the fact that the delay and the cost is affecting all of that. So what is really happening with the market? What is the state of the market? It's almost stale. The older generation, your baby boomers, they're not shopping because they're more price focused. Well, now that the shift is starting to become a price piece, I personally think that we're going to see more of that age group start to enter the market and shop again. When the rates go up and you've been with the company for 5 or 10 years, there is no person that's saying, we really like Tim over here because he's a good client. Let's keep his rate low. No, it's a system. It's a tech piece. It's an algorithm that determines what your area and what your risk is. So when that happens, we feel unappreciated. And I personally am in that boat too. I feel like if I've been with the company, then I should have a good price. And if I do well, then you should keep it that way. Unfortunately, the risk changes, the cost of repairs change, so they have to take that into calculation, which forces me, the consumer, to look at other companies. Not all companies are going up in price. Actually, I've got a few on this channel that we've talked about that have gone down in price. They've had adjustments. So typically what happens is when a rate changes in an area, they have to adjust. They have to file this with the state. So what the companies are doing is they're raising some of the higher risk zip codes or areas, they're territories now. And so chunks of territories are getting raised up that are having the problems, and then the other ones are going down. They can't technically call it a rate decrease because they're raising it in some areas and lowering it in another. Where a rate decrease would be considered, they just across the board said, our product, which is car insurance or home insurance, is getting a decrease by this amount. But because of those changes, depending on the area, it's adjusting, yes, overall 70, 80% cheaper, but because of the other locations that are going up in cost, that's offsetting that, and they can't legally or technically say rate decrease or increase. So if you're feeling the pain like most of us are right now, I want to know what your thoughts are. Leave me a comment below and let me know what your opinion is. Do you think it's okay that in general, as things change and the inflation happens, that the companies can have a rate increase? Or do you think the companies that are lowering the rate, if it's a scheme, are they just trying to get you in the door to turn around and tell you that, hey, guess what? We took on too much business. Now we need to change the rate so that everybody pays more. Is it worth your time to shop? Personally, I don't know. I think every 3 to 5 years you should think about who you're with and determine whether it's the right fit or the right company. One of the videos that you're going to see coming up shortly is actually a video on how to compare 2 different insurance companies. So when you are finding the good rate or a better rate with one, how do you know they're even the best fit? Subscribe if you want to follow that. Otherwise, if you are shopping for insurance, I put a link below that you can shop with up to 30 different companies with one app. It's pretty simple, easy to use. It's available to you. In the meantime, if you're interested in finding out who are the top insurance companies out there, I'm going to put the link or description. It's on one of these sides of me. I'm just going to put one on each side. I'm going to shrink up let me get right in the middle and just be... There's some videos. So if you want to check out the most important top 10 companies that seems to be the top trend right now, let's show you who you should look at as far as a company to go with. Otherwise, if you are shopping and you want some more advice, go ahead and check out what I would do if I was to shop for insurance again. I'm Mark with Think Insurance. I'll see you in the next one.